Hey guys, so welcome to my video where I explain and demonstrate how to fill out the form that you'll need as a buyer's agent if your client is securing an FHA loan. There are a couple of different things that are unique to this process versus a conventional loan. But before I launch into that, my name is Brad Anderson. I am the broker and owner of White Rock Realty. We operate in the states of Texas, Oklahoma, and New Mexico. And I have put together a list of contracts that you'll need for a typical listing transaction, a typical buyer transaction, and a lease transaction, whether you represent the landlord or the tenant. If you want this list, I think it is helpful to know what contracts go with what. I am more than glad to send this to you. So you can either text me at this number, email me, or whatever you'd like to do. If you are not a White Rock Realty agent, maybe you should be. And we have a lot to offer. Education and these videos are really a great example of what we do here. We make everything about education and training because I think that the more that you know, the more confident you're going to be, and that will no doubt lead to more closings. So if you want to find out more about us, you can go to this website. It tells you all the fees and all that good stuff. But otherwise, let's launch into the FHA contracts. So if you remember from real estate school, an FHA loan is, as the title of this contract suggests, it's an insured loan. The government is insuring this loan. They are not providing the loan, like a VA loan, right? An FHA loan is insured and backed by the government, but the money is given to the client from a bank, all right? So you will find that some of this language is very similar to a conventional loan. All right. So it just begins out by saying buyer acknowledges that all explanations, representations, and disclosures relating to the terms and conditions of the loan below are the responsibility of the lender and not the seller, seller's broker, or buyer's broker. All right. So the ball is in their court and their associated licensees. So this financing supplement is made an integral part of the contract. All provisions of the contract shall remain in full force and effect. So regardless of this addition, whatever else is in the sale contract still remains in effect. So the loan, number one, the contract is contingent, which means that if these terms aren't met, the contract is over. This contract is contingent upon buyer qualifying for an FHA insured loan in the amount of. So this is the loan amount, not the purchase price. So in my previous examples, I've used a purchase price of $400,000. If the typical FHA loan, they're putting down, let's just say 5%. Their loan amount would be $380,000. Okay, so that's not the purchase price. That's the loan amount. Plus mortgage insurance premium, if applicable. So if the buyer is unable to secure financing and provides written notice to the seller or seller's broker, if that's applicable, within the time period provided in the closing, funding, and possession paragraph of the contract, the earnest money shall be refunded to the buyer, subject to appropriate written authorization from all parties to the contract. So if you remember, the only date that you fill in the closing, funding, and possession paragraph is the closing date. Okay, so they have until the closing date to get financing, all right, to get underwriting. But then it goes on to say, well, within 5 days from the time reference date. So remember, the time reference date is not necessarily the date of the signatures of all parties of the contract. It could be a date into the future to give each party time to go back and forth with negotiation. So within 5 days of that date, make application for the described loan or any other such loan buyer deems acceptable, and proceed diligently to obtain such loan. If OREC, and this is an OREC form, by the way, and if OREC ever bolds or underlines anything in their contracts, they want you to pay special attention. So it says in bold, buyer shall pay initial loan fees, including property appraisal and credit report fees, at the earliest time permitted by federal regulation. Buyer shall instruct lender. So remember, buyer shall instruct lender to immediately begin the loan approval process. Buyer shall also instruct the lender, and this is a biggie, to issue a written statement of conditional loan approval. This is not the final loan commitment, all right? That's underwriting. This is just the final loan approval, which means the lender has verified employment, paycheck stubs, ability to get the loan, all that, to the seller in care of the seller's broker, if applicable, within X amount of days of the time reference date regarding the following. So before we get into regarding the following, if 10 days is the default, then you know to add on a couple of days just to make sure. Now, it is important for you and the buyer to have a conversation with the lender with regards to what you should really put in here. So if the lender is backed up or they don't know a whole lot about FHA loans, they may need a little extra time. But rule of thumb for me is 15 days. That will give the buyer or the lender enough time to do all these things, right? And so 15 days of the time reference date regarding the following. So he's got to send a written statement to the seller regarding review and approval of buyer's credit worthiness, income, and funds necessary to close. So that's really the biggest one. Do they have a credit score that's going to get them this loan? Do they have the money that they need to close this loan? All right. And then secondly, confirmation that the buyer has paid initial processing fees, and then property appraisal has been ordered. So the appraisal is not a cheap ticket. So it's really best practice to make sure that your buyer already is pre-approved with a lender before you even go out and look at homes, because they're going to have to provide all of this once the contract is signed. And then lastly, loan approval is not subject to the sale or closing of buyer's current property unless stated elsewhere in this contract. And there is a space for that. But basically, if this is not a contingency offer, meaning that the buyer doesn't need to sell their current home to buy this home, this is all that this statement is verifying. Okay, so they have 15 days to do that. Or give the notice to the seller that the loan terms are unacceptable, cancel the contract by delivering written notice of the cancellation to the seller, and receive a refund of their earnest money. Well, then it goes on to say, if within the time specified above, that's in bold, so it's important, a written statement of loan approval. So if within this time, this written statement is not delivered to the seller, well, the seller can provide buyer with a notice of intent to cancel. So notice of intent to cancel and terminate the contract. Upon seller providing the notice to the buyer of seller's intent to cancel, the contract shall be terminated upon the 4th day following this delivery. Okay, now, so it automatically terminates. However, if within those 4 days, the buyer delivers to the seller that written statement of loan approval before the end of that 4th day, the contract shall, not may, shall, will remain in full force and effect. Okay? Now, it then goes on to say, buyer's FHA down payment and loan costs. All in bold, right? In addition to any other costs required by the contract, except to the extent provided in Part B of this paragraph, a buyer shall pay at the time of closing all of these things. Okay, so it's basically your insurance costs, your taxes, all the prepaids, right? All right, and if applicable, loan origination fee. All right, then it says Part B, regarding buyer's loan costs referenced above, seller agrees to pay at the time of closing on behalf of the buyer FHA closing costs and or loan discount points not to exceed X amount. So this is if the seller is kicking in some money to pay for things that the buyer will need to pay. Okay, so not uncommon, but there is a place for that if the seller chooses to supplement the buyer's closing costs. All right, then it goes on to say appraisal requirements. And so basically this says that if the sales price in my example is $400,000 and the appraisal comes back and it's 380, well, then the contract is null and void, and the earnest money can be refunded to the buyer. Now, that doesn't always happen, but with an FHA loan, the buyer can pay the difference between, in my example, the 400,000 and 380. It just can't come from a borrowed source. I hope that makes sense. So the buyer clearly has an out if it doesn't make appraisal. However, maybe the seller comes back and says, okay, 380, 400,000, I'll just decrease the price to 380 and let's be on with it. Okay. Or the buyer can terminate and get their money back. Or the seller and buyer can come to some kind of agreement where maybe they raise the price or lower the price to 390 instead of the 380 appraisal price. But because it only appraised for 380, the buyer has to come up with that extra $10,000 somewhere. It has to be in cash. It just can't be. The only stipulation is it can't come from a borrowed source. They can't get a loan to make up that amount. Okay. And then the buyers and sellers sign this. Okay. So this section is then signed if this document is part of the back and forth that you're doing and you're sending a counteroffer to be yet to be signed by the seller. Okay, so there's signature areas for that. The part that is unique to an FHA loan is that it basically says this amendatory clause, and this is mandated by the federal government. It is expressly agreed that, notwithstanding any other provision of the contract and this supplement, the buyer shall not be obligated to complete the purchase of the property or incur any penalty by forfeiture of earnest money, deposits, or otherwise, unless lender has delivered to the buyer a written statement issued by the Federal Housing Commission or direct endorsement lender, setting forth the appraised value of the property of not less than blank, which statement the lender hereby agrees to deliver to the buyer promptly after the appraised value statement is made available to the lender. So this is just a fancy way of saying it has to meet the sales price. And in my example, that was $400,000. Okay, so this has to be in writing as per the federal government. It basically says, because this is an FHA loan and insured by the government, if it doesn't meet appraisal and the appraised amount is not the loan amount, it's the purchase price. And so this is the purchase price. This is the loan amount. Okay. So the appraisal has to be at least 400,000. Okay. So it says it can't be less than. So if the purchase price is 400 and appraises for 410, you're still good to go. It just has to at least appraise for the purchase price. Okay. And because this is separate language required by the federal government, there are signatures required, and that's where that goes. Okay. So a couple of unique items when it comes to an FHA loan. So I hope you found the video helpful. And as always, if you have any questions whatsoever, don't hesitate to reach out.